All right. Back in the action once again. Hope you had a fantastic day in the markets, but it's time to get back to work. We got a lot to cover here tonight in tonight's video. It's Tuesday evening. It is February the 11th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best of the best entry setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is extremely important because tonight we're identifying the best levels of support and resistance, the best entry setups, and most importantly, the biggest traps to avoid in tomorrow. That's Wednesday's trading session. And we have a jam-packed video in store for tonight's newsletter. We get the charts all prepped up, as you can see in the background. We get some oil, some S&P, some Nasdaq, and some gold. We got a lot to talk about tonight on the charts. Oil's back inside that range. Gold went for a wild ride today. We'll put together a plan for gold. Those bulls might get a shot back on gold tomorrow. And how about the S&P and the Nasdaq? Man, running up, running down. Got a great plan for all four of these markets here tonight on the video. And of course, we'll grab the calendar. We get some big news tomorrow. Get some big news. We get some big speeches tomorrow. We'll talk about what to avoid and what to trade tomorrow morning on the economic news calendar. Before we jump into the video tonight, though, you know the drill. If you're here for the first time right now, make sure you subscribe to our YouTube channel. I don't want you to miss every video newsletter. That way you're ready for the following day. If you have any questions for me tonight, drop those questions in the comment section below. I'll be hanging out after we publish the video tonight to make sure we get all the questions answered. And as always, if you tune in every evening to watch this video newsletter, if you use this video newsletter to get ready for the following day every evening with me here, give it a thumbs up for me. Hit that thumbs up button for me on the YouTube channel tonight. Always appreciate you guys tuning in every evening on this video newsletter. Let's not waste any more valuable time, though. Let's jump into that economic news calendar, kickstart this video tonight, and take a look at the schedule here for tomorrow. Tomorrow, of course, is Wednesday, hump day here in our trade room tomorrow morning. And, of course, you can see here tomorrow, we got another big, busy day tomorrow, Wednesday, February the 12th. What's happening here for tomorrow? Well, we got the Fed speaker tomorrow back on the stand again, right? Today was actually pretty mild, if you recall today. I was anticipating a lot less volatility today around that 10 o'clock hour, right? So I was definitely very pleased with how the markets responded today to Jerome Powell, right? It was a little bit of a slower session because, again, like we said last night, anytime we have Powell speaking, it's usually, or anytime the Fed chair is speaking, it's usually going to be a little bit slower as he speaks. And we got a little bit of that today, but it wasn't nearly as bad as it has been in the past. Tomorrow's speech is a different panel of people he'll be speaking in front of. It's the same speech. It's the same basic prepared text, which means usually the second round of speech, right? This, of course, is wrong. It was at 10 o'clock today. When we have one on Tuesday, right, the second one on Wednesday, usually the second one is a lot milder. Usually the markets don't respond as much to it because they've already heard from him the day before. Now, again, we didn't see a lot of response. I mean, gold got clobbered because of it, but really there wasn't a lot of response to what he said this morning, which was, again, kind of surprising. So we'll see how tomorrow brings, but I would anticipate tomorrow a very light reaction to that Jerome Powell speech at 10 o'clock. Normally, I would say be very careful around 10 o'clock when he's speaking, but judging on the impact we saw today, there really wasn't a lot of reaction to it. So I'm not going to be too concerned for tomorrow. I will definitely use caution, right? If things are slow around 10 o'clock, remember 10 o'clock is usually a very busy time for day trading, right? In our trade room, we know 10 o'clock to 10:30 is go time. You got to be looking for setups in that 10 o'clock to 10:30 block. So if it's slow tomorrow during that 10 o'clock block, that 10 o'clock, 10:30 block, we know why. We'll stay patient, obviously, and wait for it. Like we talked about last night on the newsletter, tomorrow you really want to focus on getting into trades early in the session. Usually that Jerome Powell speech will be relatively slow, and you'll have to wait till about 10:30, 10:40 to finish up finding setups the rest of the morning. Hopefully tomorrow's a relatively mild reaction to it, so we'll still try to get to our desks early tomorrow, right? We never know what to expect. Get the charts all updated, find those setups early in the session tomorrow. We'll see how Jerome Powell treats the markets at 10 o'clock Eastern time. And then, of course, depending on what he says, if the markets slow down, If we keep getting good price action, we'll trade right on through it. The big concern, I would imagine, though, as we get later in the morning, though, is going to be the petroleum status report for crude oil. This really puts our feet to the fire tomorrow morning because, as you may recall, every Wednesday we get this petroleum status report, right? That's the weekly inventory report. And that weekly inventory report, really what it tells me as a crude oil trader is the best setups are going to be before 10 a.m. tomorrow morning. 10:30 is the actual news report. Whenever I see inventories on oil, I always know my cutoff is about 10:15, but usually the best setups will be before 10 o'clock on a Wednesday morning. Once we get through that news, and give about 15 minutes, that's a big news report. Once we get about 15 minutes afterwards, the dust will have settled. We'll figure out what our new trends or ranges look like, and we'll go back to trading on the oil into lunch. So we know tomorrow we got the inventory report for crude oil. If you're an oil trader like we are in our trade room, get to it early tomorrow. Don't mess around with that news report at 10:30. There's so many reliable ways and times to be trading during the week. 10:30 tomorrow morning on crude oil is not considered one of them. So 2 big news reports here for tomorrow. Jerome Powell at 10 o'clock, petroleum status report. I don't know how much we're going to get Jerome Powell affecting us tomorrow, but I do know that 10:30 news is going to be a big distraction for oil traders. Get to it early tomorrow. We'll tread water for a few minutes there at 10 o'clock, see how the market responds. Get to it early on crude. As of 10:15, though, I'm sitting on hands on crude oil, focused on other markets to be trading in our trade room. And speaking of trade room, don't forget, every morning, 8 o'clock Eastern time, we trade it together in our trade room. Get registered. I'll put all the links for tomorrow morning's trade room in the description of the YouTube video tonight if you want to get registered as a member and come out and join us. Next up here, now that we got our charts, or now that we have our calendar prepped up here for tomorrow, we know what to expect in tomorrow night's newsletter, in tomorrow's trading session. Let's get tonight's newsletter off to the races here. Got some charts, got some S&P, crude, S&P, Nasdaq, gold. We're ready to rock and roll here tonight. Starting off first with the oil market here tonight. What do we got going on here on the oil? What do we know about oil here this evening? Well, first of all, we know that oil is bearish, not just in the long term, but also in the short term, right? We know that oil has pretty much been pinned right to this $50 a barrel area for a good deal of time, ever since we heard about the coronavirus. And we know that, of course, right, we're also bearish in the short term. So we know we have the long-term bears, right? The short-term bears. Everything here is pretty bearish on the oil market. What does a bear market tell me? Bear market tells me to sell high, sell at resistance. What else do we have in the chart right now? We got the range on the chart. You can see that range there, right? That range is the same range, by the way, that we had in last night's newsletter. Last night on the newsletter, we talked about this trading range. We talked about buying underneath the range. We talked about selling up above the range. Oil seems to be doing everything it should, right? What does the range tell us? Buy low, sell high, avoid the middle. So everything here is pretty much making sense right now. Bear market into a range. I'm going to take that trading range now. Once I have that trading range, I'm going to take that range, find my sell zones above, find my buy zones below. What does the range tell me? Range says buy low, sell high, and avoid the middle. I want to sell up inside my sell zone. I want to buy down inside my buy zone, and I'm staying away from the middle of that trading range. So really tonight, planning for crude tomorrow, I'm trying to kind of blend these two components together. We have a bear market, so I want to be a seller. We also have a trading range, which tells me sell high, buy low, and avoid the middle. So the obvious answer here is being a seller will definitely be where I want to focus on here for tomorrow. The problem is, you'll notice we're sitting right inside that range right now. As I go lower, I really don't want to sell underneath the range. That's the hardest part. So really what I want to do is I want to get up above that range and then sell it back down in, because remember, ranges are magnets. So how exactly do we accomplish that? What's the best way for us to sell above that range? Well, think about it. Anticipate this. If the market runs higher, what's going to happen? The buyers in the market will probably start to think this thing is turned bullish. And once they commit to that pullback now, and they try to buy that next pullback, now I know exactly where their stops are. And you'll be surprised how reliable this strategy is, right? When I get up inside my sell zone, I look for that move up. I wait for the buyers to commit to buy the pullback. Now I know exactly where their pain points are. Now I know exactly where their stops are. And I can look simply to sell into those stop losses. And I call this a failure pattern. This, of course, would be a buyer failure pattern above the high of that trading range. Now, we also, too, can watch that moving average come over. And a lot of times what will happen is that pullback will happen right about the same price we get the failure at, right? And I call this a failure into pullback combination, a very, very common scenario in a range-bound market. Now you'll notice that's a relatively shallow pullback, right? We're just going above this prior swing over here. It's not a remarkably strong move higher. So what if we did get a very strong move higher then? Would we still want to sell it? Wouldn't it feel pretty bullish? You mean almost like this move back here? Right? So this move went up and up and up and up and up, right? Remember we used that pendulum swing? We talked about this last night, by the way, on the newsletter last night. If you tuned in last night, the amount of the move under the range is the amount of the move above the range. That's why I said oil is really behaving very well right now. If you tune in every evening, we kind of saw this coming a mile away last night on the newsletter. But look what happened though, right? All this bullishness, and look what happens, right? The buyers try once, they try twice, and then it dumps right back down into that range. What happens is when you get a lot of bullish momentum above the top of a range, it doesn't say to buy. We still want to sell above the range, but it tells me now I've got to be a little more patient, right? I've got to let the buyers try a couple times before I go selling into those stop losses. So if I get a real strong run higher here now, no, I'm not going to call this, I don't want to be a buyer here yet, but I do want to respect the bullish momentum. Buyers try once, buyers try twice, and then I can be a seller back down again. Now, a heads up on this, if we do get that big pullback now, a lot of times when you stop out those buyers with that, I call this a nested failure. It's basically two failures, right, inside of one. Nested being, nested inside one, one inside the other. If I can get that failure, right, this almost always runs lower and gives us another pattern, which we call a two-try trap pattern, right? Two-try trap patterns are really, really common when the market really moves fast, right? Moves fast. So if I can get that, again, I call this a nested failure because there's two tries. It's a failure inside of a failure. That's where the word nested comes from. If I can get that nested failure, right, then I can look for that two-try trap. So there are 4 different patterns I'm watching for as this market pulls back. Again, it all depends on the strength of that pullback. That is a very big part of how we want to trade. Very simply put, we want to buy low and sell high, right? But there's a very big difference between a move up like this and a move up like that, right? Those are very different types of moves. Why? Because momentum becomes a concern. Now, what if we just sit here and go sideways for a while? Nothing really changes. We're still waiting for it to go up. We're still waiting for those buyers to try and fail so I can sell it back down again. We're still keeping an eye out for that big move up and the nested failure and back down from there. So not a lot changes if we go sideways. Now, what if we go lower here? This is where things are going to be a little bit hairy, right? Difficult to sell down here, right? In fact, last night we saw that big move down. Remember that, right? And they still couldn't break free of it. So it's not enough to just get a strong move down. The key is you got to get some proof that this range right here is no longer the range they're using. And really the only way to do this is to get a real strong move down and hold a pullback. There's a level here. This level's been here for a while now. This 49.31. I'm not sure if I can go back that far here. Oh, there it is right there. All right, back here. Wasn't that far away. It seemed like it was. It seems like the 5th of February was a long time ago, right? But about a week ago, right? That was the major low of that move, right? This was kind of the coronavirus apocalypse, right? Of the oil price. That was the lowest point that it made before going sideways here around 50. The reason why I mention this is because I really don't want to sell into that low, right? That's not a place to be selling. That's a place to be buying, right? We want to buy underneath the trading range. So how would I sell it? How would I sell this market? The first thing is I have to make sure I can get through these lows first. Because if I can't get through those lows, I'm not looking good to be a seller here, right? So what I'm looking for here is I want to see a strong move down. That's the first thing. I'm going to want that moving average to come over, and now we have to hold that pullback, right? And I'm not talking about a little jump off the moving. I'm talking about it's got to really jump. Right, it's really got to jump off that moving average, clear below that low, because that's the only way I'm going to be able to be confident now to be able to go out and look for a short trade from here. And to do that, what I'll do is I'm going to mark up a trend line off of these new lower lows. Then I'm going to come up and find the high overhead and find that hidden channel. Okay, these are remarkably reliable setups here. It takes a while, obviously, because you got to wait for the breakout. Okay, and we'll talk about a buy the low here in a second as well, right? It does take some time, but remember, in these types of moves, what you want to do is you want to stay patient during the 1, 2, 3 breakout, as I call it, 1, 2, 3. Then look to get aggressive at selling off the top of that channel, right? You're patient when you need to be, but once you get proof, hit it, right, off the top of that channel. Now, there's not a lot down here, right? There's not a lot down here. So what we'll do is, right, we'll use those round numbers of 49 and 48, right, for some easy targets as we go lower. So now that gets a good plan here on how to be a seller on this market. How can I be a buyer on this? Well, the biggest challenge we have right now is this bearish momentum. So as we go lower here, remember, you want to be buying underneath that range. I don't want to touch in the middle of that range. As we go lower here, what's the best type of pattern for me to be able to buy in an overall bear market? What I want to do is I want to use that same nested failure pattern where the bears try once, the bears try twice, and if I get really lucky, I'll get a trap low on this. Right? If I get really lucky here, I'll get a trap low on that. It's not required, but that is really a big, big benefit, right? Or a big plus for that trade, right? I call this, again, a nested failure. So if we go lower here, down to those lows, moving average comes over now. Again, I want to be a buyer off of this low, but I got to respect the momentum of those bears. 1 try, 2 try for the bears now. And what this does is this allows the bears to kind of wrap the rope around their neck, so to speak. So once we know they're in, now we know where their stops are. And how do you get out of a short position? You buy your way out, right? That's a big edge, but you don't want to get too aggressive on that buy, because you want to make sure you get all the bears roped in, right? You want to get all the bears on the bus before you push the bus over the, obviously I'm going to get too graphic here, right? Get all the bears on before you push into their stops, right? That way those stops, right, launch this thing going right back higher again. All right, that's going to be the perfect way to buy off of that low. Now, what oftentimes happens is when those markets reverse, you're going to see this real sharp one higher, right? So we go up, we go 1, 2, and we blast going higher. That blast, watch for that 2-try trap pattern we talked about earlier. It's very, very common after a nested failure, right? So what's happening here is you're loading the boat up with all the bears and then pushing them right into their stop losses, right? The market runs up, nice strong push up there. This will usually come right below the moving average. Look for that little trap low right there. Great buy setups to look forward to here tomorrow. But what if tomorrow's a news day? Right? What if we hear overnight someone from OPEC? We're still kind of wondering if they're ever going to cut production, right, at OPEC right now. If they do cut production at OPEC, I mean, couldn't this thing just launch and run higher? It could. How does this market turn bullish? What would I want to see here to start calling this now, right, a bull market? Well, same basic thing we look for as we go lower. I want to see a strong move up. But remember, that's not enough to reverse the trend, right? What I want to see now is a pullback and jump off that moving average, right? That's the key. We call that what? A 1, 2, 3 reversal. In this case, it'd also be a 1, 2, 3 breakout. I want to see it really push right through those highs here. Once I have that push, now I can mark up my trend line. I can find my hidden channel, right? Take your time, wait for the market now to pull back, and once it does, that's when you know it's time to go out, right, get aggressive, right? It's 1, 2, 3 reversal or breakout, right? In this case, into a hidden channel pullback. And then don't forget, right? Sometimes these things really rip, right? Sometimes they really rip. If they really run, right? If they really run higher here, I can look for that 2-try trap pattern where I see bears come in once, bears come in twice, right? 2-try trap, and go from there. If you're really quick, right? If you're really quick on this, you might be able to get to double dip this and get both sides of this. A strong move up, a shallow pullback, a higher high, a trap low, right? To get that run. Okay, you might be able to get this. This may come together all in one swing here. A 2-try trap going long, the moving average comes over, and then we see the 1, the 2, and we dump it right back down again, right? It would almost look like, right, we saw back here, that strong move up, a little higher high. This is obviously inside the range. You wouldn't take this one, right? But that type of pattern right there, that's the pattern I'm talking about right here. Right? Then we may see later on in the session we saw back here, right, where it comes 1, 2, and dumps back down in. So if we can get, again, that's going to be very close. It's very close quarters there to get both those setups. But those are some options we're watching for as we go into tomorrow's trading session. Most important thing is avoid the middle, buy low, sell high, and use the appropriate pattern depending on the market's momentum. And speaking of the appropriate pattern, I use 4 specific types of patterns in our 3-step strategy. I want to give you a deeper dive into all of these patterns. So if you're not with me tomorrow in the trade and do it with me tomorrow, make sure you grab the free trading course. I'll put a link in the upper right-hand corner. I'll put all the links, by the way, in the description of this YouTube video, as I mentioned earlier, right? So if you're not with me tomorrow in the trade room, again, 8 o'clock Eastern time, we trade this strategy together. That way you don't have to do all this on your own. If you're not with me tomorrow in the trade room, make sure you grab that free course linked up in the upper right-hand corner. Grab the little information icon and get registered on our website. Or again, if you want to register as a member, I'll put all the links in the description of that YouTube video. All right, we're looking good. So now we got the black gold, the Texas tea, the crude oil all good to go. Remember tomorrow morning, early in, early out tomorrow because of those inventories. Now, how about some S&P? The S&P and the Nasdaq are a little bit challenging here tonight. There's a lot to think about on these markets. We're going to make some sense of it here tonight, though, right? If I have it my way. What do we know right now about the S&P? We know the market overall is very bullish, right? So it's obviously very bullish overall, but it's difficult to call this a short-term bull market because of this overall bearish, the overall bearishness that you're seeing right now. So I definitely think the bears have a little bit of an edge. I know it's very bullish overall, and I know this could be seen as a buy the dip moment, right, on the S&P 500 and the Nasdaq for that matter, right? I think the biggest clue, though, of the overall bullishness of this market is, this is why I circled this area right here, is that low from today, right? The fact of the matter is the bears had all the momentum, but they didn't even go back to hit today's low. That to me tells me we're not as bearish as we may seem. It's also one of the big reasons why I look at this range, and I think of this now as a range. Because anytime we see a bull market that fails intraday, this is 10:30 when it failed, right? Failed intraday. It's almost a guarantee they're going to go back down to retest that low, at least touch it, right? That's always their big objective. And you can see they really tried, right? You can say they probably tried 3 times here to get that low hit. The Nasdaq, which we'll see in a moment, the Nasdaq actually took out its lows. So the Nasdaq might be a bit of a foreshadowing of what to expect here for tomorrow. I would imagine these sellers have one thing on their mind, and that is to take out those lows at that 33, 49 and a quarter, 33.50 area there down below us. So we know we're overall bullish, but we know we have this bearish kind of cloud hanging over our heads right now. We know the bears do want to get down to retest that low. What else do we see here? Again, I think there's a range on here. What does a range tell me to do? A range is telling me to buy low, right? Use the size of the range to find the buy zone. Sell high, size of the range to find my sell zone. And what do? We buy low, we sell high, we avoid the middle, right? Like on crude oil, I can take the amount of the move up, the amount of the move down, right, that becomes a level of support as well. And you'll notice it lines up right in with that low I was talking about earlier. So there's got to be a big old bullseye right now, right on that 33.5 area for the bears, right? So we know there's a range. Buy low, sell high, and avoid the middle. So how do we buy this market right now in the face of these bears, right? How do we buy this market right now in the face of these bears? One pattern that stands out to me is a crown reversal. As we make, what this low, what I'd like to see, honestly, is I'd like to see them go down, get that low taken out. Right? Take out that low, and then we can use a nested failure pattern, 1 try, 2 try, and buy back up from there. That would be the ideal scenario here. Let the sellers get what they want out of this, right? It's almost better if they just get this low hit. I would imagine a lot of buyers are probably waiting to buy right underneath that low as well, just because it just jumped right in the Asian Open. So I'd like to get this market down, flush out all those buyers, right? Flush out the stops, get those sellers now to think this market has reversed, right? And then, again, because it is so overall, again, short-term bearish, long-term bullish, I still have to respect that momentum. I'm still going to look for the buy, though. Look for 1, look for 2, and then back up. And remember, too, guys and gals, a lot of times when those nested failures trigger, a lot of times they rip higher here, and as it goes higher, look for that 2-try trap pattern. Just remember, though, you don't want to trade inside the range, right? That's going to be the tricky part here, right? You don't want to trade inside that range there. It'll be a 2-try. Again, it's a nested failure, right, into a 2-try trap as we go back up into this range now. Now, that low makes me a little bit nervous about being too aggressive up here, right? Because we may see this thing come over and really dump. So to be a buyer right now, I'm going to look for the most reliable setup that I know, right, to buy in a overall bear move, and that is a crown reversal. Okay, this would be a great setup if we could get it. What I'll need to get another higher high in price, right? So in Asia, we open up, we come down, we tick below that prior low, nice strong signal candle to buy it right back up. A lot of this is I'm anticipating that sellers are going to come in off the top of this channel, which reminds me, what would the best way to trade this be if it doesn't, right? What if it goes in and we get stuck inside this range? If we get stuck inside the range, it's just a range-bound market at that point. I'll look for the market to run lower. I'll look for the bears to come in, try to sell and fail off the EMA and literally buy into those stop losses with a seller failure pattern. Does that make sense? Right? So again, couple scenarios I'm watching for right now. One would be we get the job done into a nested failure, right? Hopefully into a 2-try trap going higher, right? The other, of course, would be a crown reversal. And again, a lot of this is just because I have a feeling that low is still going to be targeted, right? When you say Nasdaq, you'll see what I mean. I have a feeling that low will be targeted here. I'm going to let these bears try once, let them try twice at a higher price, right? And then again, that may go all the way up to the top of that channel and come back down, right? That may be how dramatic that move is. If we do go up into the range, this is something we definitely want to be aware of. We do go up into that range and get kind of stalled out here now. Again, I want to buy underneath an overall bullish range. I realize we're bearish in the short term here, but if we sit inside that range right now, that's going to absorb a lot of that bear momentum. I'll wait for those buyers to run out of bullets going higher. I'll wait for it to pull back below that low. Moving average comes over. I can use that seller failure pattern now, right, to buy back up in, right? So we're talking a lot about these failure patterns and nested failures, buying underneath the low of this range. That's all we're trying to do. Is we're trying to use momentum, right? Momentum is the big concern right now because of the overall, that short-term bearishness. We're using momentum to choose which type of entry pattern we want to use. And again, as I mentioned earlier, you can grab that free course and see hundreds of examples of all of these entry patterns right on our website as a member of the free course. And again, all the links I'll talk about tonight in the description of the YouTube video. Now, we know we've got a range here, right? We're talking about being a buyer. How could I buy as the market runs higher? What would be some options? Well, I could use the 1, 2, 3 breakout for sure. That would be the one I'd most rather use, right? Strong move up, obviously. Pull back to the EMA. Jump off the moving average now. Remember, that's the key. It's got to jump off the moving average. When it jumps off the moving average now I draw out my channel, right? I find my hidden channel. I draw the trend line first. I find my hidden channel, right? And again, this is one of those patterns where it will take a little bit of time to develop the pattern, the 1, 2, 3 reversal here. But once they get that reversal, now the bulls have it again. And now I can get aggressive, right? Being a buyer off of that low, right? Now, again, maybe we get lucky. Maybe we get a big, strong run higher here. Big, strong run higher. Pull back, usually profit taking, higher high, trap low, right? What happens is you get these strong moves higher, a shallow pullback with a higher high. Once I see that shallow pullback with a higher high, now I know buyers are all waiting right below that low, right? And when it comes back, wait for that nice strong signal. It'll usually be just below the moving average, just below that moving average. And I always try to go out, try to find a kind of like a hidden channel, right? And buy off the low of that hidden channel. That really makes that trade, that setup really almost bulletproof. Again, it all starts with, though, a very strong run going higher here. All right, so now we got that covered, right? Now we're to the buy side, or for both above and below the trading range. Let's talk about sell side now. How exactly do I sell this market? Here's the big problem I have right now. If we make a run up into the sell zone right now, this is going to look really, really bullish. So the only way that I can really justify being a seller, you know what I mean? If we, it's a range, right? So if we want to sell, I want to sell high. Well, if I go all the way back up, that's not going to be a very good bear market anymore, is it? So, anticipate now, right? If we do get all the way back up now, this is going to be really difficult to want to be a seller. And so what I'll do is I do want to sell high, but I want to sell high with the right type of pattern, right? I want to try once, try twice, and then sell it back down from there, right? We see a good example back here, right? Strong move up. Buyers try once, buyers try twice, right? And then it makes the tumble back down again. You wouldn't want to get aggressive at selling above the high of a very bullish market right now. So we go up, right? Buyers try once, buyers try twice. And again, you want it coming off the moving average, right? Off the moving average there. Once, twice, nice strong signal, and we can sell it back down from there, right? That will be a good spot to be a seller as long as we can get the right entry setup. I'd rather, honestly, if we make it all the way back to those highs, right, I want to be a buyer at that point, right? I want to make sure I'm buying because it'll be a very bull market at that point if we do make it all the way back up into that trading range. Which reminds me, right, another option may be it may jump as it goes higher here, right, into a trading range up here. Don't be surprised if tomorrow morning we're ranging out at new all-time highs tomorrow. If we do get that move up and it sticks up around that high now, just simply treat it as a range, right? It's nothing different than a bullish market now with a range. What do we do with a range? We buy low. What do we use? We use those seller failures. We wait for the pullback. We wait for the bears to come in trying to sell that pullback, and we simply buy right into those stop losses. So if we do make a run higher and we sit there, right, and go sideways, right, that will give us more clues here. Well, that will confirm a new trading range, and we'll get back to business here, buying low right off the top of that trading range, or off the bottom of that trading range. Okay, we're looking good there. How about price going lower here? How do we sell this market as it goes lower? Well, as I mentioned earlier, even if it goes lower here, I still don't have a lot of confidence because of that pendulum swing, right? If we go lower, I'm still looking for that nested failure and that move back higher here. So we're going to have to go strong move down. We're going to have to hold that pullback, right, and really jump off that moving average. If we can get that good jump off the moving average, I have no problem being a seller. I'm going to mark up that low, right, mark up that high, and we'll get aggressive at selling off the top of that hidden channel. Where would my target be? We know where the target is for the buyers, right? The buyers want to get back to retest the high. That's pretty easy. Where's my target to be if we go short here for tomorrow? There's a range back here at 33, what is that, 33 and a quarter? Yeah, that would be a really good, juicy target here for us tomorrow, right? If we can get this thing to run back down. It's a big range down there. So 33.25, 33.20. Again, if we can get that 1, 2, 3 breakdown, mark that low, find that high, right, and sell it. Again, you'll usually got to get pretty aggressive off that short, off the high of that hidden channel. You want to be patient while the mark confirms, then hit it, right? Then get aggressive once it starts to pull back. Now we're talking here. We've got our buy side, got our sell side here. We know how to treat the right both sides of the market. We're good to go here now on the S&P. Don't forget, grab that free trading course I mentioned earlier. That way you know what we're looking for tomorrow. How about some Nasdaq? Now, the Nasdaq's a pretty good example, right, of what we talk about on the S&P. The Nasdaq did get its pendulum swing. It did take out those lows from earlier this morning, right? You can see the Nasdaq here. So what do we know about the Nasdaq right now? We know the Nasdaq is overall very bullish. Right? We know the long-term trend is bullish, and we know that if history repeats itself, this will probably be seen as a buy-the-dip moment, right? Probably a buy-the-dip environment here on the Nasdaq. Now, that doesn't negate the fact that we have a very bear move down, right? We can't ignore that part of this market right now. So we definitely can see the market is overall bearish. Well, overall bullish, short-term bearish, I should say. What else do we know here? We also know we got that trading range, right, smack in the middle of that, right, of that session. This was a little bit easier to find, right? That was a pretty easy range to find. They came back into it again, and the chances are we're going to end up right back into that range here, if not all the way back up to retest the high here, right? The bottom line is ranges, of course, tell me buy low, sell high, and avoid the middle. Now, if you watch my newsletter every evening, or I know you try to do every evening, right? But whenever you can, you know that I'm a big fan of expanding triangles, right? Expanding triangles are really, really great levels of support and resistance. You can see right now we're sitting, well, not sitting on it, but we're coming off of that expanding triangle low. Now, this is not good enough just to buy it, right? I don't think I would ever just buy the low of that expanding triangle. But if I can get this market running into that triangle, get the bears trying once, the bears trying twice, right? Little trap low on this. That's a beautiful option here now, right? For, again, what do we call it? It's a nested failure, right? Because we're so bearish, we're trying to buy off of this low, but we have to respect those bears. The key is I want to see one try, a little bit higher, I want to see two tries, and really the icing on the cake will be a double bottom, right, at that prior low. Even better would be a trap low. A trap low would really make it very easy to be confident taking that trade going higher back up into that trading range and hopefully back up to retest those highs. That's definitely something we're watching for here right now. So we know we have a range. We're right in that buy zone. Again, like I mentioned, the S&P still has some work to do going lower. The Nasdaq doesn't. The Nasdaq already got that low taken out. They got their pendulum swing completed. At this point now, as long as I can absorb this overall bearishness, right? We got one. I want to see him two. And then really the biggest thing is, right, is get that thing as low as I can so I can buy it now going right back up into those stop losses as we go. Now, another very important scenario to consider here would be, what if the market doesn't pull back? What if it runs back higher here? Now, if it runs higher, if you really kind of thread the needle, we might be able to get a two-try trap pattern. That'll be pretty close, though. That might not be that easy, right, to go out and get our hands on. You know what I mean? That might be pretty difficult to find that pattern there. If we run back into the range and sit, right, now we know this is just a bull market at that point into a trading range. What do we do with a bull range? We buy low. We buy underneath that low. We wait for the buyers to get a pullback. Once they get that pullback, we know that sellers will likely see this overall bearishness and want to sell it. Hopefully they do, so we can, of course, buy into their stop losses, right, for a long back up into that trading range. Again, continuing to buy underneath the range, staying out of the middle of that trading range. If things really get interesting and it really starts to run higher here, I'll look for that 1, 2, 3 reversal or that two-try trap pattern. So imagine now we get a strong move up, right? We get that pull back to the moving average. They blast off the EMA. Yep, now I can grab that trend line, find that hidden channel. And as long as I can get in on this before we get back up to retest those highs, I like the idea of buying off the low of that hidden channel support. Again, stay patient for the reversal, but then get aggressive, right, as you go in, right, to hit the low of that channel. Or if we really start to punch, right, real big, juicy candles there, big strong move up, shallow pullback, higher high, trap low. What is that called? A 2-try trap pattern. Again, this will usually be just below the moving average, and you will really try to use, right, always sort of incorporate a hidden channel, right? That is one of my favorite setups right now. Very strong move up, shallow pullback, higher high. That's the most important part, right? Shallow pullback, higher high. Once I get that shallow pullback and a higher high, now I know exactly where those buyers are waiting, right, to get in long. They're buying as low as they can, right? They're buying as low as they can to avoid what? To avoid buying too high, right? To avoid buying into the overhead resistance. And as I mentioned on the S&P, if we do end up going all the way back to these highs here again, don't be surprised if it sticks up there and goes sideways. And if that's the case, we'll shift this range up to a new range, and we'll treat it as a bull market into a new trading range, right? What do we do with the range? We buy low, we sell high, with a bull range looking to buy low, right? With that seller failure, right, into pullback combination. The exact same patterns that we talked about earlier, right, throughout this video. So now I think we've done a pretty good job here at covering the buy side of this. How could I be a seller on this Nasdaq right now? Well, again, right, being a seller, I can get short off the highs. Ooh, but boy, that's going to be a really bold move at that point, right? So if I go back into the range and I make a run back up, or if I just take off to the upside here, what's going to happen? Yeah, buyers are going to be all over this thing, right? So if we go higher, back to these highs here, I can sell off the high, but I really got to be careful with what? Wait for the 1, wait for the 2, yeah, and then you can sell it, right? We don't see markets take off like that very often. The market here in this example, I think the market got powelled, right? I think they got powelled here. No, a little bit later on in the morning here. Never mind. Don't expect markets to turn like that very often, right? Very difficult to predict those types of turns. So if we do get that move running higher here, it'll look very, very bullish, right? Don't want to be trying to sell into a market like that. 1 try, 2 try, then I can sell it as long as I can get those buyers to really load the boat, right? That's the goal. The goal is get up there, let those buyers pile on, right? Load the bus up, and then once those buyers fail, right, we can sell right into those stop losses. Remember, you need an edge, especially if you're going against a trend like that. You need some sort of edge, and the edge, of course, is all the buyers are strapped in tight, right? And we're just hitting that stop loss, right? Running back down into that trading range. So a great opportunity there to be a seller, but again, with the right pattern here. It's pretty obvious to see here right now, the buyers are going to have a field day if this thing gives a nice strong run higher here. How about a move lower? Right? A move lower. Now, honestly, at this point, we've already accomplished that pendulum swing. We really don't have a lot. The next level here on the Nasdaq is all the way down that I would consider to be support will be that 94.54 area, right? That was that level from last night's newsletter we were trying to get that pullback to. So, I would imagine this thing could easily collapse here. I mean, easy come, easy go, right? It could easily collapse here if it wants to run lower. We already have a relatively strong move down here. So if I can see another shot lower here, I have no problem finding that hidden channel and looking for that short, right, off the high of that hidden channel. At this point, the market is still very bearish here, as you can see, right? So if we do get this thing to go up, right, and go one more leg going lower, I will definitely be looking for a hidden channel pullback off of that high. I will definitely be looking for a strong move down, shallow pullback, trap high for a 2-try trap pattern. These are definitely the patterns I'm looking for here as we go lower, right, to find the channel. Or if it really just collapses here, again, shallow pullback, lower low, trap high. It'll usually come right off of a hidden channel area, right? Usually those hidden channels are pretty easy to find. It'll be just above that moving average as we go lower. That is definitely food for thought for tomorrow. So now we've covered the buy side. The sell side's not going to be easy going higher here. That's obvious right now. We'll cover the buy side, cover the sell side. Stay away from the middle of that trading range again. And remember, tomorrow morning, 10 o'clock is Powell. I don't expect him to do a lot of new things tomorrow. I don't expect to have a big impact on the market tomorrow, but just be aware we may have to tread water tomorrow around 10 o'clock Eastern time. Wrapping up here tonight right now on the gold. Looking at gold right now, gold really, and we talked about this last night on the newsletter, we knew that gold would probably be the market that'd be most susceptible to some back and forth when Powell speaks, and gold definitely responded bearishly at 10 o'clock this morning, right, because of it. What do we know right now on the yellow metal? We know the bears are certainly in control in the short term. A strong move down into a trading range. Right? In a bear market, we go up, the buyers try, and they fail right back. I mean, that's textbook, right? So strong move down into a trading range. What do we do in a range? We sell high, right? We buy low, and again, you can see a buyer failure pattern above the top of that trading range. So pretty much textbook. And then you can see that strong move down, right? That strong move down completes a measured move. We can get rid of these, clean up the chart there, right? The pendulum swing is completed. The amount of the move above the range is the amount moved below the range. You know, the pendulum swing is a great spot for targets. We talked about that on crude oil last night. It's a big part of the analysis for the Nasdaq and the S&P this evening. Everything we've talked about so far is really showing up here now on the gold. The biggest thing is, we know we're bearish, right? We definitely know we're bearish. We're back inside that range. So what does a bear market tell me to do? Bear market says to be a seller, right? Sell at resistance. It's not that easy to find resistance levels right now. I've got one drawn up here as kind of like a hidden level of resistance there. But it's not easy to find resistance. The next close level of resistance is the top of that expanding triangle, which for my long trade would be a pretty good, right? Pretty good target, right? For a long side trade here tomorrow morning, right? We'll talk about that here in a second. We get a range here. I think the range is the biggest clue on this chart. Okay, so what does a range tell me to do? It tells me to buy low. It tells me to sell high, and it tells me to avoid the middle. Okay, so if I want to be buying low, if I want to buy low in a bear market, how could I buy low in a bear market? I would want to, of course, wait for, get that off there, right? I want to wait for the strong move down. Well, not too strong, right? But I want to get outside the range, get down inside my buy zone. Ideally, I want to get down in that side, the secondary buy zone. The reason I say the secondary buy zone is because the range is so narrow. And remember, anytime we have a narrow trading range, we always know that the edges, right? The extreme edges, buyers buying the low, bears selling off the high. Remember, narrow ranges make a good risk-reward ratio very difficult unless you get a big breakout. So ideally, I'd like to see us make a run going lower. I want to be a buyer on this, but I don't want to buy against the bearish momentum unless I see that, what was it again? That nested failure pattern, right? That one try off the bear, right? One try for the bears, two try for the bears. Then we know the bears are all loaded up. And now we can target, right, buying right into those stop losses, right? Remember, if it goes even lower, back down to that low, same basic idea, right? It's one, it's two, and then we know where stops are, and we're buying into those stops. Remember, too, those nested failures, a lot of times they turn into those two-try traps, right? We've talked a lot about those here tonight on this video, right? Again, a nested failure, move lower, bears try once, bears try twice. Again, it's very bearish right now, so you don't want to fight that momentum. You're buying into those sellers' stop losses. And then again, before we get back into that range, right? Before we get back into that range, we grab that trap. Or before we hit the other side of the range, I should say. Right? It's okay if we get back into the range as long as we don't hit that 72.5 area, right? That's the objective. The objective is to get back to the other side of the range. And then obviously, right, this thing could easily pendulum swing all the way back up again. But that, of course, right, isn't the story. So now we have a good plan here, right, as the market goes lower here, 1, 2, and back up from there. Now, let's just say, for example, that we sit here for a while tomorrow, right? Let's just say for tomorrow, we got Powell speaking at 10 o'clock. Let's just say, for example, here we sit right inside that trading range. If we sit and we sit and we sit, honestly, that's going to absorb a lot of that concern about the bears, right? I'm not going to worry so much anymore because that range will have kind of taken a lot of that momentum away. It would have really kind of soaked up the momentum like a dry sponge. You know what I mean, right? If the market takes off the downside now, it's still very bearish, right? Everyone sees it. But if it sits here for a while, now I would definitely not ignore that strong move down, but now I'm a lot more comfortable now if I get this market going sideways for a few hours, getting below the range, getting those sellers to fail off the moving average, right, and buying it back up. Right? If we see the market at this point, though, going sideways and it really shoots lower, obviously, real strong move down, then yeah, right? We know the bears have come back into the picture again, and we'll look then for that nested failure. So again, choosing the right pattern is very much a factor of where we are. Do we have space? Right? Because sometimes we don't have a lot of space and we look for trap patterns, right? Sometimes we're going against momentum and we look for those nested patterns, right? Those kind of 2-try patterns, we call them. And of course, right, it all depends on, momentum and kind of the context of the market that we're trading in, right? So as the market goes lower, that's when we want to buy it. How else can we buy this market right now? What else could we buy this thing? What if it goes higher here? I really like the long side of gold right now, if we can get some momentum, because remember, even though gold is bearish right now, gold is for the most part a pretty, overall very bullish, right? Overall very bullish right now, and this could easily be seen as just one big range up here, right? And we got 1, 2, and right back up again, right? This could be one big seller failure and a run back up, right? This market got hit a little bit by Powell's testimony. But, once the ink dries on his speech tomorrow, this gold could easily come rallying right back higher again. So I definitely do want to be ready for that tomorrow, right? I do want to be ready for it. So again, it'd be a 1, 2, 3 reversal, 1, 2, 3 breakout, right? Mark the high, mark the low, and buy the low of that hidden channel, right? The other would be, of course, that strong move higher. Now remember, that strong move higher is probably hunting for that trend line up there. So shallow pullback, higher high, trap low, right? In this case, momentum shifts to be a buyer in this case, right? And again, because we know we have some overhead resistance to worry about, we look for a trap pattern. That's why I said earlier, the pattern itself is one part momentum and one part market context, or where we are, right? If I have concern about a trend line overhead, I'm concerned about buying too high. I'm concerned about buying into resistance. In that case, I'll use a trap, right? Traps are really, really common. Just remember, you want that higher high in price, right? That higher high in price, that tells you that trap low, what I call a 2-try trap pattern. Bears try once, bears try twice, 2-try trap pattern for that buy going higher. So now we got a couple of good options here to be a buyer. How do I sell this market? How do I sell this market? I can sell this thing with a 1, 2, 3 breakdown, mark the low, mark the high, sell off that high, right? I can sell that. I don't want to sell underneath the range, right? I don't want to get caught trying to sell that pullback. Right? It might work, but it's not a very reliable trade. Trades like those are more likely to fail. Right? You don't want to make that mistake, right? I mean, look back here. Strong move down, they still failed. So you can't even say a strong move is enough, right? It's got to go strong move down. It's got to hold that pullback. It's going to jump off that moving average. That's going to tell me now the buyers have given up, the bears have it, and they're breaking free of this trading range. That's the key, right? Remember, a trading range has this kind of magnetic field, right? Everything above it gets sucked back in. Everything below it gets sucked back in. If we can get away from that, if we can get out of that magnetic field and run lower, now gold is telling us something. They're telling us they're looking for something new. right? Looking for something else to get to. So strong move down, they pull back to that moving average, strong move off the EMA, mark that low, mark that high, and we'll sell off of that high from there, right? Now, my target, if this thing does want to go lower, there's a range back down here. Yeah, that range right there. That range right there makes for an easy target if these bears can get on their horse, right, and get this move going lower, right? That 15, what is that, 15, 58, 15, 56 area as we go lower. The buyers, of course, they want to get back up to retest the high. Now, can I sell above the top of the range right now? That's another question for the gold here, right? So we got our range right now. There's our range. If we just sit here for a while, right, can I sell above the range? I can. Remember, if we sit for a while, that will absorb a lot of the momentum. But as we go higher here again, right, the market will still feel, it'll feel very bullish. So for me to want to be a seller in what is probably going to be attacked by buyers, because they're gonna have that FOMO of missing out on that move going back to retest those highs, right? If we do get that strong move up and want to be a seller here, I'm gonna want to still look for that nested failure, I think, on the gold here, 1, 2, and then back down from there, right? Just because of the way the market bounced off the pendulum swing, if it runs through, it's going to feel very bullish, 1, 2, and then back down again. If we really sit, if we spend a good portion of tomorrow inside that trading range, 10:15, 10:30, I would consider at that point just a straight up buyer failure, right? But I just don't think it's going to happen. I think what will happen is if it does sit here and it breaks, it'll probably break pretty strong. And the only way to buy that, only way to sell that would be 1 try, 2 try, right? And then again, it's a nested failure to sell back down in. I think you're more likely here to get, if it does break higher out of that range, you're more likely here to get that strong move up, that shallow pullback, that trap and go, just from what it feels like right now on this gold. And again, a lot of this move I'm sure was because of Powell, right? Talking about winding down QE, things like that we heard today. All right, guys? So a great plan of attack here for the gold, the buy side, the sell side. We are all ready for tomorrow. The only thing I need is you now. So as I mentioned earlier, all the links to get registered for tomorrow morning's trading session as a new client of mine, all those links are linked up in the description of this YouTube video. If you're on the blog right now at Sideways Markets watching this video, there's a big blue button for you right below the video tonight on the trading blog, or just go to the website at schooloftrade.com, grab the advanced course. That comes all inclusive with all of our video classes, all the indicators and tools and templates we use, and of course, a lifetime membership to our daily trade room where we get together every morning and execute this strategy together. Don't be afraid to call me tonight in the office and go over all the details. I'd be more than happy to walk you through the process I'm getting registered for tomorrow. Don't be afraid to use that live support tool on the right-hand side. And as always, if membership is not quite right for you today, make sure you take that free trading class that I mentioned earlier. It's part of our free trial. It's a great way to kickstart a new trading career. Or again, if you just want to make sure you're getting the most out of our time together every evening on this video newsletter, not ready yet to be a member, grab that free trial, grab the free course, right? Learn the trading strategy, hundreds of examples of how we apply our trading strategies to our favorite futures markets as part of that free trading course. Everybody loves it. I know you'll love it as well. All the links are in the description of the YouTube video. And that'll do it here for me tonight, guys and gals. Wonderful job out there today. Had a fantastic day today with all the clients in the trade room. Hope you had a great day. But it's time to wrap up. Time to get some rest tonight. Rest up for a busy day tomorrow. Big news at 10 o'clock tomorrow. We'll see how the market responds to it. Hopefully I'll see you tomorrow at 8 o'clock at the opening bell in the trade room. If not, come back and see us again tomorrow night on the next edition of our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.